Hi folks, Lee Gettess here with the Market Sense for the week of May 28th, 2013. We look at charts that come from the Trade Navigator software, and the first chart we're looking at is a weekly bond market chart, and that's actually just one day. This last bar over here, we've got Monday on Tuesday this week, just one day we're looking at so far, and as you can see, it pretty much matches most of the ranges for the previous weeks. Bonds have broken down really hard here. We've got resistance at 146, 144.16, and 143.16, none of which have been approached. And they've just broken down and just trashed the support somewhere in the 142 area that obviously doesn't mean much. There's not much to look at down here other than the lower Keltner channel, which is below 140. It's about 139.28, somewhere in that area. That's about the only support we can see. Now, a lot of people ask sometimes, well, what do you do when you run out of support? Well, essentially, you tend to have to go look at higher time periods to see what's going on. And I'd like to show you something you probably don't see very often. This is a yearly bond chart. And you can see that they've turned down for the year so far, but where are they? Well, they're right at the upper moving average, which is essentially where you'd expect them to hold if this 22, 23-year long uptrend were to continue. And by the way, that upper moving average is 139.27. So 28 on the daily Keltner, they may not hold here. Obviously, this is a long time to be rallying like this. They're due for a turn down of some kind. But it just pays to keep the perspective in mind. Oh boy, bonds are just, there's no support. They can go to zero. Well, maybe, but maybe not. And here's why. Now, looking at stocks, I got to tell you, stocks kind of irritated me today. Actually, it wasn't stocks that irritated me. It was the media. Everybody that I heard after the market closed today talk about how wonderful and bullish a day it was and how, we won't get a correction. You got to buy them because you're never even going to get a correction. Well, this doesn't look all that bullish to me. I mean, that's a daily bar and a weekly bar that looks like that. And you can see they went up pretty good from the previous close, but then turned and closed close to the low. I don't look at this as terribly bullish. Now, that doesn't mean that they can't hold someplace and go back up. But we've got a mid-Keltner channel down here that this week is at 1554, and it'll keep moving up. At some point, they're going to go down there. I promise you. The guys that are telling you can't get a retracement, you're not going to get a pullback of any kind, yes, you will. I don't know when, but yes, you will. So far for this week, we're looking at resistance in the 1679 area, which they did not reach, even though they rallied so nicely early Monday morning or Tuesday morning. And clearly this upper moving average doesn't mean much as they've been on either side of it. That's 1661. It looks like the support for the week should be somewhere in the 1643-44 area, this middle moving average. And that would actually look pretty good. It would be very closely below the previous close. That would still look pretty good. But I certainly can't rule out seeing them go down to 1622 here, which is the lower moving average. And I'll repeat myself. They're going to drop to this mid-Keltner channel at some time, and I can't tell you that it won't be this week, because it could be. It actually would make sense within the next week or so, because it would kind of coincide with these old swing highs right in here to come back down into that area. I don't know if they'll do it this week, but I think they're probably getting close to time to do a more major back off like that, regardless of what your media people tell you. So that's what we've got for you today. I hope you can find something profitable to get yourself into this week. Thanks for checking in to see how we're looking at things.